Hello everyone, we are going to continue with our Forex Basics tutorial series. Let's see what topic we have today. Okay, today we are going to talk about very fundamental and basic concept. What are chart types? They tell us about price and we actually determine the current price of the currency pair through charts. Let's see what it is. Okay, in Forex trading, the price of the currency pairs is actually displayed in the form of charts. As a Forex trader, this is your first step to look and analyze the price charts for your analysis, and then you're taking a position later on. There are three main types of charts commonly used in Forex trading, and you can find these charts whatever trading platform you're using for your Forex trading. So number one, line charts, number two, bar charts, and number three, candlestick charts. So now let's look at it one by one. So number one, we have line charts. Line charts are basically one of the simplest form of charts when it comes to the financial markets, and it has already been used by the stock traders as well. They are based on the lines that are drawn from one closing price to the next closing price. Such a chart is an easy way to show the general price movement of a market over a specific period of time. And because of their simplicity, because it's just a line that tells us the price movement, line charts are also help to recognize technical patterns and are often preferred by the beginners. So if you are new to Forex trading or new to the financial markets, it's advisable that you start with the line charts. So this is how it looks like. You can see it's just a line going up and down, and it tells you the price movement. Okay, now let's talk about bar charts. Unlike line charts, which only provide closing prices of an instrument, bar charts provide opening and closing prices, as well as the highs and lows for that period of time. And the bottom of that bar shows the lowest traded price for the chosen period of time, while the top indicates the highest price that was paid at that time. The whole bar represents the trading range or the trading range price from the specific period of time. And opening and closing prices in the bar charts are represented by horizontal marks to the left and right of the vertical bar respectively. So we will just see the picture. Okay, this is how the bar chart is displayed. So you can see there are long bars, short bars, and you see a tiny bit of dot on the left side of the bar and the right side of the bar. It shows the opening and closing of the price. So let's look at it in more detail. So there are actually two types of bars that can appear on the chart. One, it's very easy to identify them. Once you look at the vertical bar, it shows the relationship between the opening and closing prices. And one type is bull bar, rising bar, and the other one is bear or the falling bars. Bar charts present the data individually without linking prices to neighboring prices, and each set of price field is a single island and shows how the price has behaved during a specific period of time. Now let's look at it how they appear. So this is kind of a picture. You can see on the left you have a bull bar where you can see the prices are going up, and you see it's a bar, and on the left is the open price, and on top towards the right it is the close price. And in the same way we have bear bar, meaning that the price is going down, and on top the left side is the open price and right side is the closing price. So actually it's a vertical bar, but the prices appear on the horizontal level, just like in both these pictures. Okay, number three is candlestick charts. Similar to bar charts, candlestick charts present the same information but are arguably visually more accessible and more clear. There is more detail in it. And similar to the bars, candlesticks refer to the high to low range with opening and closing levels. The highest price is indicated by an upper shadow, while the lowest is shown by the lower shadow. We will see that in a moment in the picture. And the longer the body is, the more intense the buying or selling pressure. That means the longer the body is, there was more price movement in that time period. And conversely, short candlesticks indicate little price movement and represent consolidation, means that was a period of time when the market was quite calm, so there was not that much movement. So long bars and short bars. So let's see now in the picture. You see it's a smaller body, which tells us that there was not much movement of the price, and then you have a long body which shows us that there was a lot of movement of the price. This is the body of the candle. This is a short body, and this is the body of the long candle. And the line above and below, and here above and below, these are called the shadows, or they are also called wicks. So in this case, for candlestick charts or candlestick candles, we also call them, here we have the open price, here it closes, the closing price, and this wick or the shadow that's going upward, the maximum it goes, it tells us the highest price for the day. And then on the bottom we have another shadow or the wick, and it tells us the lowest price for that day. So this is how it is kind of anatomy of the candlestick chart or candlestick bar. So now let's look at it in more detail. We have this bearish candlestick, the price is going down. We have shown it kind of a black with the bearish candlestick as the price is going down. So this is where the price opens for this. When the price goes down, this is where the price closes, and this is where the upper shadow, the maximum it goes, it shows us the high price, and this is where the low shadow or the low wick, as far as it goes, it shows us the low price for that candle for that particular time period for the day. And then let's see, we have another candle which is bullish, which means that the price is going up. And now the system inverses. We have open price here, and then close price here, and then the wick or the long shadow, the maximum it goes, it shows the highest price, and then we have a low price, the low wick or the low shadow. So you can see it's almost kind of opposite. For the bearish candle, when the price is moving down, the open price is over here and the close is here. But for the candles that the price when moves up, the order is reversed. Here the price opens, and then here the price closes. So this is how it's a kind of a detailed anatomy of the candlestick charts or candlestick bars. And then we have a little more detail. Compared to traditional bar charts, many traders consider candlestick charts more visually appealing and easier to interpret. So there are a lot of opinion, but candlestick charts and bars are traditionally the more used in forex trading. And each candlestick provides an easy to interpret picture for price action. And immediately a trader can compare the relationship between the open and close, as well as the high and low. And the relationship between the open and close is considered vital information and forms the essence of candlesticks. So this is how candlestick charts or candlestick price movement works. Alright guys, thanks about it. Thanks for watching. I hope you will like the video. I will see you next time. Bye bye. Have a good day.